Hey guys, Michelle Massio here. Thanks for joining. Thanks for checking out my video. I'm going to set my timer. I am going to show you in 11 minutes, 10, 11 minutes, something like that, on how you can trade uh, commodity stuff, but stocks like very successfully. So I'm going to show you an example on silver. Actually, it's a trade that I just did like 2 minutes ago, and I'm going to walk through it exactly with you. It works for gold. It works for stuff that's Bitcoin related. It works for silver. It's kind of cool to trade non-correlated assets. So every year I go to an amazing financial conference with the best financial minds in the world there, and all of them always say like it's very important to diversify. Now, most people misunderstand the term diversification. They think like diversification, maybe you have to have like 100 different things or something like that. First of all, number one, you don't need, let's say, 100 different stocks. If one stock, if when stocks go up, they kind of all go up, like all boats rise with the tide, sort of like as an example. But what I mean by diversification is, in your portfolio, it's important to have non-correlated assets, because if something drops significantly, like let's say the stock market crashed, as an example, you don't want all your eggs in one basket. You don't want all your money in stocks, right? You want to have like maybe a little bit of real estate. Maybe you want to have some commodities like gold or silver. You probably want to have a little bit of Bitcoin. I'm a big believer in Bitcoin. I had a lot of Bitcoin and then I sold it recently, which is kind of funny because now I'm like shot to the moon. Bitcoin, that's another conversation. But what my point is that everybody should own pieces of different things in case something crashes. You don't lose all your money, right? So that is the point here. So let me walk through this silver trade with you. I'm going to share my screen. Hopefully these videos are helpful. Please subscribe to my channel. I have videos in different places. So I do have a Facebook group that's public. I have a private one that's a pay group that we do some, extra things and stuff like that. And then I have a YouTube channel, really that I'm trying to grow, where I keep a lot of these videos. So please subscribe and also let me know if there's other things that you want me to do a video on or to show you. Yesterday I did a video on how you can have a small account. It was like, how you can start trading options with like 1,200 bucks and make yourself a uber high rate of return. I did a trade that made like an annualized rate of return of 1,600%. I know it's crazy. And maybe you're probably not going to make 1,600% in every trade, but it's very, very doable. And that's what's so exciting about options, stuff like that. So I think you guys are seeing my screen. Let's go through, I'm going to show you this example on silver. Okay. So SLV, so you can trade options on lots of different things. You can trade options on individual stocks. You can also trade options on ETFs. Now, what's an ETF? An ETF is an exchange traded fund. You could do like a basket, like QQQ is a basket of technology stocks. SLV is like the silver ETF. GLD is the gold ETF. And silver and gold, and also there's a volatility index, VIXY, VIXY. Those are all good to have like as hedgers in your portfolio. Again, like non-correlated. What does non-correlated mean? It means that they're not correlated. It means like sometimes stocks go up, sometimes commodities go up, sometimes they go down. They're not really related to each other. So it's kind of a good hedge to have in your account. So I already had some SLV. And I added some more this morning. So let's just walk through and I'm going to show you exactly what I did. Okay. So let's just start by looking at the chart, right? Now I know sometimes I showed this to a friend of mine the other day. We kind of like looked at the screen like this and he was like, oh my gosh, I'm so confused. Don't be confused. If this is your first time looking at it, it looks way more confusing than what it is. It's so easy once you break it down. So first of all, we always start by looking at the chart, right? So we always start by looking at a 52-week chart. This is SLV over the past 52 weeks. SLV is very, very thickly traded, liquid. You could see like 25, 50 million on volume. So it's kind of cool. Here's your 52 weeks. So again, each tick is going to represent one particular day. A red bar is it was lower today than it was yesterday, and green is the opposite. One thing that I want to remind you guys, The people in my group know about this, but this is super important for people to understand. If you're buying stock or an ETF in this case, you always want to have a stop in place. Why do you want to have a stop? So here's my thing. I buy stock or ETF. I sell covered calls. I take in income as if I'm an insurance company. And then I also sell puts. Again, taking in income as if I'm an insurance company. When you sell a put, you're promising to buy that stock if it goes down. I have lots of other videos that go deeper into some of this stuff. But my point that I'm trying to make right now is always make sure you have a stop. Why? Because the market could crash and you don't want to be like glued to it, right? You don't want to, let me give you an example. Every morning I work out at 7:30 to 8:30. That's why when you see me, I'm still in my workout gear. I didn't take a shower yet. But my point is I turn my phone off, right? And other occasions I turn my phone off also. Like I don't always have my phone on or my laptop on or something like that. And I don't want to, let's say, go work out for an hour, come back and see that, oh my gosh, my account was, $10,000 and now it's, $6,000. You know what I'm saying? It's easy to make money. It's much harder to keep it and not lose your money. So I know I've said that lots and lots of times, and I'm going to keep saying it lots and lots of times. Always have a stop in place. You don't want to ride it all the way down. Last week, I had a really, really crappy position, Zoom. I traded and I made a mistake. We all make mistakes, even if I've been doing this a really long time, 20 plus years overall, and I still make mistakes. We always make mistakes in everything that we do. But my point is, my mistake was, it went down and then it went down more and I bought more and I wasn't cutting my losses. You have to cut your losses short and you have to take in incremental income day by day by day by day. Okay, so let me show you silver. So I bought some silver. You could buy 100 shares, you could buy 1,000 shares. I bought, I think, 1,300 shares. Silver right now is trading at 25.57, right? I bought it. Where did I buy it at? Let me take a look. It was just a few minutes ago. I bought it at 25.555. There's my fill right there. And by the way, I have a program where I share all my trades with you, with people in the group. So let me know if that's something that might be of interest to you. I think it's pretty cool. Just hit me up and I'm happy to give you details. Okay. So let's take a look at silver. So I bought it and I previously already had silver and I had my stop at 22.90, but actually now I'm going to move my stop to $24. I think, let me just refresh my memory. SLV. I keep some spreadsheets. These are really cool. They look maybe more confusing than they are, but really what it does is it kind of shows you what your percent at risk is. So it's always important to pay attention to your percent at risk, given how much you're paying for something and then where you put your stop at. Again, it's easy to make money and it's harder to lose it. So you want to make sure that you don't lose it, or when you do lose money, it's very, very small pieces. That's the purpose here. All right, so I am going to move my stop, but basically let me show you what I did. I bought shares at 25.555. And then what I did was I sold a $26 call. What does that mean? And again, I have other videos that go more in depth, but basically just as a reminder, I paid $25.50. We're just going to round it off. I sold a $26 call. That means that if silver is 26 or higher between now and Friday, right? Because I do every very short term. This Friday, next Friday, I want to make short-term money because I don't know what the market's going to do tomorrow, right? If silver is 26 or higher, I'm going to sell my shares at 26. So that's kind of cool. I paid $25.50. I sell it at 26. For that commitment to sell it at a certain price, I'm paid money as if I'm the insurance company, right? That's the whole purpose here. I was paid $35. So now, again, $35 might not sound like a lot of money, but $35, I sold 13 of them. You can sell as many as you want, 13 times 35. So I took in $455 on that one trade today. And the trade ends on Friday. So this is literally Tuesday. So it's like a 4-day kind of risk thing. My stop is at $24. I'm going to move my stop. See, I already had a stop at $22.90 because I bought silver a few days ago and then it kind of went up. And here's the thing about stops, people. You can kind of I bought silver before around here. So I had a stop over here. Now it's kind of gone up. So I'm going to move my stop up a little bit. So let me do that. I'm just going to do that here. Let's see. Let me just move some of my other things here. Silver. First of all, I have to put it back to my position. And I'm going to put my stop at $24. $24. Mhm. I have things covering my screen here. So, okay, 24 and update. Okay, so let's just kind of walk through that quickly. So silver, I own right now 2,600 shares of silver, right? My average price is 24.961. What does that mean? That means that, because I bought it a couple times, that's like the average per share. We'll say $25. Right now, silver is trading at 25.56. I have a couple of different calls. I have $26 calls and $26 $50 calls that expire this Friday. That means, let's go to the ones that I sold today. That means if silver is 26 or higher between now and Friday, I'm going to sell my shares. So I'm going to make what? My average is $25, 24.96. So let's say silver ends at $26, just as an example, $26 on Friday, right? I'm going to sell. Oh, that's holy cow! That was already 11 minutes. Let me make it quick because I don't want to bore anybody and I don't want to drag things on, but I want to teach you and I want to share all this amazing stuff. So let me just wrap it up and then you can hit me up with questions. But basically, let's say silver ends at 26 on the button, right? 26. I paid 24.961. And then I have 1,300 of these, right? So 1,300. So I made 1,350 on the capital appreciation of silver. And then I also made 0.352. So 35.2 times 13. I also made $415 on that. So plus, I think the other number was 1,300. So I would have made like $1,700. So it's very, very cool. So here's my purpose. And again, I don't want to drag this on. My point is you could trade options on individual stocks and you could trade options on ETFs. You can do baskets of ETFs like QQQ as an example. That's like the technology. I do that sometimes. The volatility is really small on QQQ. Sometimes you don't make as much money. I like SLV. I like GLD. I like to have these diversifiers. Riot, I've been trading Riot is like a blockchain company. I just actually bought some Riot earlier. It's up, it's up 12%. I think I bought some more, like 1,000 shares 10 minutes ago or something. And it was up like 9%. So here's the thing, people. I'm going to give you guys a good thing. Read, let me find the name of this book. I think it's called like Turtle Trader or something like that. Hang on, I'm going to find it. Applications. I think I have it in Kindle. This is actually a really cool book, and this can kind of shed some, let's see, library. I read a lot. Reading is amazing. Reading just expands your mind. Okay, The Complete Turtle Trader, right? By Michael Koval. This is a really good book. So this talks about especially when you sell covered calls, go with something that already has momentum, right? Go with the trend. The trend is your friend, all these little things. Like Riot as an example is already going up. You can buy Riot right now. You could trade for very small. Somebody emailed me earlier and they're like, Michelle, how much do I need to start trading? You don't need a lot of money to trade. I mean, this account is kind of big, but you could have a small account. I mean, Riot, you could buy for $18.57. You could literally buy 100 shares for $1,800, $18.57. Actually, you pay less because you can use margin, right? Usually. And then you can sell a $19 call that expires this Friday, 4 days from now, and you get paid $109 for each one. So I mean, this is selling options. It's funny. Like I have some friends of mine that buy options. When you buy options, you are kind of like looking to 10x your money. You're looking to pull a slot machine. You want to pay $100 and make $1,000. You want to buy a lotto ticket, pay $1 and hit a lotto jackpot or something. I look at it the opposite way. I want to take in small pieces of money. And let me show you something. I trade each and every day, and it's all about taking in income. Income is spendable. It's spendable in your pocket. When you sell an option, you get cash dropped into your account right now. It's very different than like buying a stock and then you don't actually realize that money. You can't spend that money until you sell the stock. This is different. You get the money dropped in. So like right now, for example, I have to pay attention to a couple things per day. First of all, right now, today versus yesterday, I'm up 1%. Where's the market up? SPY is the S&P 500. The market's up about 0.5%. I'm doing twice as good as the market with lower risk. Now that doesn't always happen every day, but that's my metric and that's my goal all the time. The other thing that I look at is how much money did I take in today? So so my amazing technology guy that does stuff for me, he built this API. If anybody's interested, it's very, very cool. This just kind of I can count, like, here's my trades today. Look, this is so amazing. I'll put all these videos online for free, and you guys see all my stuff for free. I'm a big believer, like, I just want to share all my stuff. And then if people want more information, then I charge for more information generally. So this is very, very cool. But here's all my trades, and I could count this up manually, but that would take a really long time. So what I have is I have this API, which is kind of like quick. It just counts it up for me. So this is just today. These are all 1/8. See, 1/8 is Friday. Well, I have like maybe 1/115, but for the most part is 1/8. This Friday, puts and calls that I sold, that I took in premium. What's this number, people? 37K, baby. So this is my point. You could take in so much money on a daily basis. When you sell options, you can create yourself income each and every single day. Now, is there risk? Of course, there's always risk, but you can minimize the risk by doing the things that I was showing you before, by like having a stop on your stock, and only limiting how much you lose to whatever you're prepared to lose, et cetera. But anyway, my point is, it's important to have tools that help you make the best decisions moving forward. So I try to hit like 35K a day in selling, premium. I'm a little bit higher, and I'm going to keep going because there's some good opportunities today. So anyway, I am way over my freaking 11 minutes here. I really, 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 really hope this stuff is helpful. Send me a message or put a comment online or something if you want to see other things. I'm trying to like show lots of different things. Like I showed a Moderna trade before, like how you can capitalize on making money from this goofy COVID situation. That other trade where you can have an account for $1,200, how you can make money with small accounts. This is a silver trade, like, commodities, ETFs. So I'm trying to like provide information on different things. Anyway, I hope this helps. Hit me up with any questions. And as always, happy trading to you guys. Cheers.